Unifying Nigeria's exchange rates, tackling inflation, creating 1 million jobs through the digital economy, sorting multiple taxation, remodeling the economy, increasing Nigeria's GDP, and more are just some of the economic highlights of President Bola Ahmed Tinubu's first speech as president of Africa's largest economy. Nigeria's new president has seemingly hit the right notes on the economy coming out of the gate, with maybe the exception of the fuel subsidy, given how Nigerians have now queued up to get fuel. But the markets seem to be happy with what the president has laid out. Equity markets in Nigeria at the Nigerian Exchange Limited kicked off the week on a bullish note, hitting two-year highs, the most significant single-day gain since the 12th of November 2020, as the all-share index settled at about 55,745.74 basis points. Victor Aluyi, Senior Vice President and Head Investment at Sankore Global Investment, joins me now to look at this. Victor, welcome again to Business Edge. Thank you so much for joining me. All right, Victor, I can't hear you. Let's see if we can get this connection going well.
Hello.
All right, there we go. Loud and clear. Thank you so much. All right, so we saw the Nigerian equities rallying about 5.2%, and this has even been given a name now. It's been called Tinubu by analysts, which is quite interesting if you're following all of this. And it's because Nigeria has posted one of the best day returns ever. So with all the things that President Tinubu said in his speech, particularly the things that are targeted at the economy, what exactly do you think the markets was reacting to the most?
I think the market reacted really to his pronouncement, if you will, or statement around the unification of the exchange rates. The market also certainly took well, his concerns about interest rates being really high. And certainly the market very much liked, the whole pronouncement about subsidy, which again, the team has gone ahead to clarify. It's not a case where this is something that is happening just now. From the appropriation bill for 2023, the provision for subsidy essentially ceased, by the end of June. So he was just re-echoing what had been done. But clearly, I think that, him echoing that, on that podium, coming from him, spoke quite a lot of volume. And the market took that to mean that, this administration is certainly going to go through with it. We've seen in the past where, provision was not made, the administration comes in, prepares a supplementary budget that it then sends to the National Assembly for approval, and then goes ahead to continue with the whole subsidy regime. But again, we saw that on the campaign trail, where he basically alluded to the fact that, the whole subsidy regime will be a thing of the past. And then him essentially re-echoing that on that stage, I think that was something that, the market really, really heralded and really, really loved. So I think those were some of the major points that the market took. And that's why we saw, the markets really flying out of the gates yesterday.
All right, so let's talk about this flying out of the gate. So we're saying market reacts. A lot of people want to know what exactly those reactions were. We saw that out of the top 10 gainers, 8 of them, including Zenith Bank, FCMB, Transcorp Hotel, and Nigerian breweries, gained about 10%. So let's look at some of the other reactions that we saw from the market, from the president's speech. In terms of that, we also need to look at, has it continued? Today now is Wednesday. This was a speech given on Monday. Is there somewhat of a momentum that's also carrying over? Victor?
Well, yeah. So, I mean, obviously, there was a knee-jerk reaction, right? And we saw the market really move very strongly yesterday. We're certainly going to see some sort of correction today. But what has happened is that, that has laid the foundation for the sort of sentiment that we're likely to see going forward, right? Particularly on the macroeconomic front, there have been various concerns around, the nation's fiscal sustainability, chief of which has been, the whole subsidy regime. So I think that with that pronouncement and, with the implementation, if you will, we are certainly likely to continue to see, positive sentiments, for the markets in general. But with the sort of knee-jerk reaction that we saw yesterday, we certainly could see, some profit taking coming into, the remainder of the week.
And that really was my next question, because we saw something similar like this in 2015, and that was when the Independent National Electoral Commission announced former President Buhari as the winner of the presidential elections. We saw stocks gain for about 10 straight days, running from the 24th of March all the way to the 8th of February 2015. Though this case is different because it's post-inauguration, it's in his first inaugural speech that we're seeing this sort of reaction. A lot of people are wondering if we're going to see a longer-term momentum or if this is really a knee-jerk reaction. So you're putting it more at a knee-jerk reaction that we could see some profit-taking between today and the rest of the week. Am I correct?
So yes, we've seen a knee-jerk reaction. However, I think that the positive sentiment is going to linger for much longer, right? I think in 2015, the whole change mantra was something that was really very solid, right? But now what we're seeing is the fact that on the day of inauguration, the president is basically dishing out key economic policy considerations that the markets have been waiting for a very long time. FX has been pretty much the elephant in the room for a very long time. So the fact that on his first day, the president is talking about unifying that exchange rate. On his first day, he's talking about taking away that subsidy regime. On his first day, he's talking about the fact that interest rates are restrictive and excessively high. The market is essentially saying, this is our guide. This is what we want to hear. Certainly, we are going to see momentum drifting and out. Of course, if you see very strong movement, there's certainly going to be profit taking. But I think that except something else happens, the momentum from here on out is certainly going to be upwards.
Okay. So let's go to that elephant in the room. And before we get to what exactly the Tinubu administration has to do to change the exchange rate situation, let's look at how it's affected Nigeria's markets, how it's affected investor sentiment and confidence here in the country. So how many windows really does Nigeria even operate? That's part of the biggest question many people wonder. How many different exchange rates are there floating around this country? And when we look at the varying windows, the impact that they've had on the economy as well as investor sentiment and confidence. Victor, take us through that.
I mean, we essentially have two windows, right? If you look at it, there's the I and E window, which essentially reflects the official rate, if you will. And then, of course, there's the parallel market window. I think the challenge really is the fact that you've got a very, very wide spread between the official window and the parallel window, which, before inauguration was anything around 300 naira. That's a really huge spread. And it essentially encourages a lot of arbitrage, a lot of rent-seeking behavior, which do not necessarily benefit the country in any way, shape, or form. So I think that has been the issue. However, in sort of trying to close down that window, the ammunition in which the Apex Bank would be able to do that is not plentiful in supply. That has been the challenge. Nevertheless, I think that policy initiative in that direction that ensures that we don't just reduce the multiplicity of windows, we ensure that there really isn't any arbitrage between windows. I mean, if you look at before January of 2020, we had the official exchange rate at around 360. You had the parallel market rate at about 363, 361, depending on the day. There really wasn't any incentive for any arbitrage. But today, with the sort of spread that we have, it incentivizes people to go into rent-seeking behavior, creating arbitrage that essentially creates significant deadweight loss for the economy. So these are the issues really. That window needs to close, whether the parallel rate needs to come down or the official rate has to go up, whichever way it has to go. It is important that the window closes such that arbitrage is significantly reduced, and that will significantly take away the rent-seeking behavior that has constituted a major problem for the economy.
We also saw the naira gain on the black markets against the US dollar. Just very quickly, what do you make of that? Is that, of course, possibly a sign of things to come?
I mean, so it's again part of the body language from Mr. President, right? Talking about the need to unify the exchange rate. So clearly, there's a lot of uncertainty in that market right now. We're not clear what's going to happen, what direction things are going to take, what policy initiatives will be implemented to ensure that happens. So all of that really remains to be seen. But I think in the meantime, like I said, momentum is overwhelmingly positive. So that's why you see, the naira will be sort of positive in that market. But again, the devil really is in the detail. I believe that over the next couple of days, we should get indications, get details as to how this will be done. I think Mr. President met with the central bank governor yesterday. I would want to imagine that those are some of the conversations that were had. So we really are waiting on some of those details and exactly how this thing will pan out.
All right, Victor, I need you to look into a crystal ball now. We're all waiting for the details. We're waiting for what the exact policies will be. But looking at where Nigeria currently stands right now with the debt conversation happening, the fiscal space conversation, what do you think are the first initial steps we should possibly recommend or anticipate from the Tinubu administration when it comes to attempting to unify the exchange rate?
Well, I think I've said it here a number of times, really. In attempting to unify the exchange rates, there's a lot that needs to happen. One of the critical things is to ensure that we really get our earnings, oil earnings up, and that will really come as a result of us increasing production, right? Because it's important that we get really significant accretion to our reserves, because that is the ammunition with which the Apex Bank will be able to create some sort of defense as to where they want that currency to kind of sit within the parallel and the official market. So I think the ability to have significant accretion to reserves will prove very crucial, in unifying that exchange rate. It's not going to happen in one fell swoop. It's something that is certainly going to take some time to happen. But I think that, hitting the ground running by the new administration is certainly something that is positive and that will, help very significantly in that direction.
All right, so moving away a bit from the exchange rate, it was high inflation rates that led to a high interest rate. And we, of course, have seen interest rates looking to, of course, move up. It also means macroeconomic policies, actions, and results must also be able to rein in inflation. And the president did touch on interest rates and inflation in that speech as well. So Nigeria's current interest rate stands at 18.5%, increased by 50 basis points at the last MPC meeting. Inflation has also hit 22.04%. So it's easy to make pronouncements in speeches, but what's the real work that needs to be done here, particularly when we see central banks around the world continuing to hold on to this hawkish stance, continuing even now to increase interest rates as they continue to battle inflation? We are not an island. We're not immune from that. We're also fighting inflation, which is supposedly reined in by increasing interest rates. It just really hasn't seemingly worked that way. In terms of the work the Tinubu administration needs to do when it comes to interest rates and, of course, inflation, what's the real work?
Well, so the real issue is the fact that the sort of inflation that we have in Nigeria is not the kind of inflation that you have in the Western world. Our inflation is largely driven by cost constraints, right? While inflation in the Western world is largely driven by demand. So the fact that prices are rising in Nigeria doesn't mean that people all of a sudden have more money trying to buy more goods. That's not the issue. The issue really is around the cost constraints that are occasioned by all of the infrastructure issues that continue to be there with us. The infrastructure issues, the security issues. So raising interest rates does not address or rein in cost push inflation, right? Raising interest rates is not the way to go. And we've seen interest rates rise quite significantly over the last year, and inflation has essentially done the same thing. Mm-hmm. So clearly, that battle against inflation using the interest rate tool is ineffective. It's not going to work. Truth of the matter is that we have to solve our inflation challenge by addressing a lot of the infrastructure bottlenecks that we have. You have to also look at the fact that, yes, inflation is much higher globally. We import quite a lot. So essentially, we're importing a lot of that inflation that is in the globe. Also, the FX situation hasn't helped. So all of that has created the sort of inflation that we're seeing. But more critical is the fact that the infrastructure issues, the security issues have remained front and center in driving up inflation to the point that we have seen. Raising interest rates have not been effective. It hasn't been effective in addressing this inflation debacle that we find ourselves in. This is going to be solved by fiscal policy initiatives that would address the insecurity, that would address the infrastructure challenges that we have, that will address the food insecurity challenges that we have. Until these things are done, we're going to be dealing with inflation that will certainly remain sticky. Of course, base effects will come into play and bring it down every now and then. But as long as these infrastructure issues remain, as long as the FX issues remain, as long as inflation remains somewhat elevated, in the global economy, we're going to continue to grapple with this inflation challenge.
All right, so widening that a bit, we know that the president also mentioned that monetary policy needs a thorough house cleaning. And as you mentioned, he did meet with the what many people have described as the outgoing governor of the Central Bank of Nigeria, Godwin Emefiele, yesterday. But beyond the currency mathematics and sort of the rest of the work that the CBN is going to need to do under this administration, how do you see things shaping up and playing out with the CBN's statutory responsibilities, its independence as well, which many have questioned under the previous administration of President Muhammadu Buhari? What do you think is going to happen?
Well, I mean, constitutionally, CBN is independent, right? Again, if you have a commander-in-chief who has really strong economic views, it becomes really difficult for the CBN to, particularly those views are at variance with what the Apex Bank holds. It becomes kind of difficult for the Apex Bank to remain completely independent, because at the end of the day, the commander-in-chief recognizes that monetary policy is a very strong tool with which to attain or achieve its economic objectives. So the administration is coming in with its economic objectives, and it is, looking at the Apex Bank as a major tool with which it would achieve those economic objectives. So in that kind of situation, it becomes increasingly difficult for, the Apex Bank to be completely, independent. It will largely be a reflection of the policy leaning or policy preference of the new administration.
And let's go to that, the policy lean, the policy preference. A lot of people see President Tinubu as someone who is for a free market, who is a capitalist, an investor darling, if we would say, and definitely a difference from sort of the body language of the previous administration. What is it that you think investors, particularly foreign investors, like the most about President Tinubu? Is it something they're taking from his 8 years as governor of Lagos State, or even some of his statements beyond that? What is it that investors are finding so interesting about him? Let's use that word.
I think investors have been looking for, traction, if you will, or pronouncements around FX. Investors have been looking for some certainty or clarity, around subsidy. Investors have been looking for clarity and also certainty around interest rates. And he made pronouncements or statements, around these variables on his inauguration day. He didn't sit on the fence about them. He made his policy leaning very clear and essentially lean towards what the market wants or what the market would prefer. So clearly, this is something that the market certainly likes. For a very long time, subsidy had been, a very contentious issue. But, in one fell swoop on his first day, he's making a very bold statement to say, look, this is how this administration wants to run. This is what we lean towards. FX has certainly been the elephant in the room for a very long time. On his first day, he's making pronouncements about that. I mean, the market really couldn't ask for more. Clearly, the devil is in the detail, like I said, but I think that the leaning or the posture of President Tinubu, speaks really, really strong volumes to investors at this point in time.
Okay, so let's look at something coming from Moodys. Now, according to the global rating agency, Tinubu's readiness to confront the issues was credit positive, but the agency warned of a risk of a transitional period of higher inflation, weaker economic activity, and more social discontent. We've probably started seeing the discontents with some of the skyrocketing transport fares and the unending fuel queues now. In terms of the validity of the fears that Moodys has expressed, what do you make of this?
Well, those fears are valid. Really, the truth of the matter is that there are no significant reforms that are without pain. The subsidy reform is going to have some initial pain. You're going to have prices, really jump up significantly. It would also certainly some social, discontent, initially. However, I think and believe that what it does is to ultimately free up significant resources for the government to tackle the infrastructure issues that we have. And that would ultimately put the economy on a really sustainable fiscal path, on a very virile growth path that would bring gains, in the medium to the long run. But the truth of the matter is that in the near term, there certainly are going to be pain. So there really aren't any significant, policy moves that are without pain.
All right, and finally, Victor, before I let you go, some have said that there were a few critical things missing from the president's first speech, including addressing the cost of governance, as well as the speech avoiding the huge debt overhang that Nigeria's economy and his administration will have to grapple with. Now, without any action or a plan to address the huge debt burden, it will be quite difficult to bring down interest rates together with inflation. Do you think it's a critical point in noting that the president did not touch on these issues? Was there anything else you think was missing economically? Yes, he can't go into all the details, but we know what the touch points are, what the pain points are for the Nigerian economy.
I mean, the truth of the matter is that I didn't think he needed to make any pronouncements around that. I think pronouncements or leaning around subsidy, around FX will go a long way in benefiting the economy and ultimately reduce our debt burden over time. So the truth of the matter is that the debt is what it is. You really can't do anything about it in the near term. However, there are policy initiatives that you will certainly put in place that will then have that, effect or impact on our debts, going forward. What that would do is ensure that we're not borrowing as heavily as, we've been doing over the last couple of years. And that will certainly have an impact on not just, interest rates, but also inflation going forward.
All right, there's a lot more to go in this week as well. We'll see if any of that momentum can carry over. But Victor Aluyi, Senior Vice President and Head of Investment at Sankore Global Investments, thank you for joining me. We'll be watching very closely, and I know we'll see you in a very few days when we see how things play out. Thank you so much.
Thank you for having me.
All right, fantastic. And it's a conversation that we're following very closely. Of course, field queues are back on the streets across Nigeria, which is going to be our main conversation after international business headlines. But that will come up after this break. You're watching Business Edge. Do stick around.